Mr. Reddy, good morning. Thanks a lot for joining. The company has shown good growth, as Varinder was just speaking about. But looking ahead, does this fixed pricing by regulators limit your revenue growth? And what may a steady growth be?
Well, we are a regulated industry, and for every tariff change, I have to go to SEBI. But look at the kind of tariff that we are, the kind of revenues that we are having. One is the annual issue charges, and SEBI has fixed them in 2015 once again. They have increased it, and for other charges, our board decides, and then we go to SEBI and then get the approval. So it's not a constraint in that sense,
Okay. So with these new launches like commodity repository, can we expect revenue growth of 20% going ahead?
Well, I'm not going to put any figure to this, but we will grow at whatever we have been achieving it over the last few years. We'll continue to maintain that growth rate. That's the way it is. There's no reason why we should not be able to achieve so much.
Okay, what about the margins? Do you see margins improve further because of fixed costs and operating leverage playing in?
That's right. Our costs are not going up the way that revenues are going up, and definitely the new growth initiatives will only add to the bottom line. That's the way I look at it. Maybe marginal increase in cost, but then substantially add to the bottom line, whatever that comes in the form of top line.
You have a lot of cash. You have about 548 crore, and that almost comes to about 52 rupees as a contribution into your share. Can you help us understand how you will use it?
Look, about 250 crores that we have, the cash is required to maintain the net worth. In the depository space itself, we have to maintain about 100 crores net worth, and for the CVL, about 30 crores, and CARL about 30 crores, about commodity repository about 50 crores, etc. And we have also interest-free deposit of 25 crores from the depository participants. So all in all, about 250 crores is taken away, and we have already distributed about 45 crores as dividend in the for the FY17. We have declared a dividend of about 30%. That is about 3 rupees per share. It's already been distributed. We have also bought a new premises. About 75 crores we have provided for it, but about 65 crores we have spent, and another 10 crores for or maybe 78 crores to do the internal fit outs. So that's the way it's needed, and that leaves about 125 to 150 crores. So not much cash is left.
Mr. Reddy, your return on equity has been falling from 30% it was in FY13 to I think it's 17% in FY17. Reason for the dip, and do you think it can improve from here?
See, if you see that we had the 25% we had to provide for investor what you call protection fund, and that is by way of a regulation. In 2013 onwards we have provided for it. That has been reduced to 5% with retrospect effect, and that too in our operating from our only operating profits, not from the the total profits. So that has that has caused a dip in the revenues in the previous years, if you see, but all of a sudden it has improved. That's why you see there were 33 crores we have plowed back into the bottom line in FY16. The other figure, other reason for the you're not able to see that is because as per the IGAP, we have what you call our investment income is not booked because the long-term capital gains tax was imposed. But the rules for long-term capital gains has been changed from 1 year to 3 years, and most of our investments which are in FMPs have been rolled over. So that's why you don't find that kind of numbers. But now that as per Ind AS, all that has been streamlined, and then I'm sure you will not find that kind of thing.
So finally, can you help us understand the timeline for all the new launches that you've spoken about?
Well, we expect this to be launched in this current financial year, but the single demat account we do not know, because it is all regulators have to come together and then find out way to implement that, or rather figure out how to implement that. But we are ready as far as the depository is concerned. We can implement it. It's a technology solution that we can provide it. The depository participants can participate and then implement it. But the rest of the services can be rolled out or will be rolled out rather in the current financial year.
All right. Thank you very much, Mr. Reddy, for joining us, and all the best for your offer, your IPO. We have to wind up on